What is going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about Redbox Entertainment or Rdbx stock because, well, it is the shiny object once again. This is a stock that I was talking about a little bit ago on its run from $2 to $11 per share. Now, it is starting its second run, round 2, so I wanted to bring you guys the update. If you guys enjoy this content, I highly appreciate all the thumbs up that you guys leave on the video. Also, if you guys wanted to check out Hootmoney trade alerts, we've been absolutely killing it. We ended up sniping a SPY call at the bottom on Friday at 380. It's up over 130% right now. Literally over the weekend, making money. Hootmoney trade alerts. We also sniped TRKA at 38 cents, and we made some other plays. I'll throw you guys the profit loss that we've been getting on the screen right now. But with all that being said, Hootmoney trade alerts is the first link in the description or pinned comment section if you guys wanted to check that out. Let's get right into today's video. So here you guys can see the Ortex data, 136% short interest compared to its free float right there. 400% cost to borrow, 100% utilization on the threshold list. So this is an absolute juicer, and you guys can see the short interest spiked up like crazy right over here on about May 6th to May 7th. That's when we first saw 150% short interest in Rdbx. Now, the important thing to know about Rdbx is that they have this deal with Chicken Soup for the Soul Entertainment to buy Redbox for 69 cents per share. Now, the exchange ratio for this is something like 0.087 of CSSE for Rdbx. So this is why the short interest is so high. So let's just pull up a calculator right here because we have the price of CSSE right there, and we'll pull up the price of Redbox, and you can see that there's a huge difference between what this deal is going for and what Redbox is trading at. So CSSE, it's at $6.12 as we speak. So $6.12 times 0.087. And that's essentially how much Redbox technically should be worth right now, right? Because that is the exchange rate for this merger that is happening between the two companies. So because of that, Redbox technically is worth 53 cents. And it's trading at $6.10. So let's just go back to one chart right here. And you can see it's been running from like $2.45-ish cents. So Redbox has obviously been running despite the fundamental value being much lower. And the reason for this is because it is a race between retail investors and market makers underneath a condition, a very good condition for a short squeeze. So 136% short interest, 400% cost to borrow, 100% utilization on the threshold list. Everything is adding up for an enormous short squeeze in Rdbx, other than the fact that, well, it's worth 56 cents per share, technically speaking. Now, the caveat here that benefits retail investors is the fact that mergers often take a long time to actually go through. So retail investors have, well, roughly about like 6 months or so, based off of my personal estimate, before a merger actually would end up happening. And as you guys can see here in the filing, that either company can terminate the agreement, and all they have to really do is pay a termination fee of $15 million. You can also see that either party may terminate the merger agreement if the mergers have not consummated on or before October 31, 2022. So considering the fact that Rdbx is trading for $6 per share right now, and the merger values it at 56 cents per share, there's a good chance that this merger agreement can also get terminated because, well, investors in the company probably don't want to give up their shares for 56 cents. Wouldn't that make sense? No pun intended. Anyways, there's a variety of lawsuits. We'll see if we can briefly find it in the news. Yeah, you can see that there are a few class action lawsuits because, well, they pretty much did something that is not in shareholder interest with this merger. I mean, $6 stock merging for a company and they're getting paid 50 cents per share. It doesn't really make too much sense, and that's why lawyers are going after this as well. So there's a lot of things here that could end up terminating this agreement. And again, for only $15 million, the company could get out of it. And obviously, they'll make more than $15 with their current stock price being up over 12 times what the merger is agreeing for. So it would make sense that this merger does fall through, right? In a fundamental world where everything makes sense, obviously this merger makes 0 sense. And it would be in the best interest of RDBX to literally just cancel and terminate the agreement, pay that $15 million, and it'll be all said and done. And if that does happen, obviously it still has super, super high short interest, and shorts will want to close, because I believe that the only real reason that this has over 130% short interest in the first place is because short sellers are banking on the fact that eventually they'll be able to cover their positions for 56 cents. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely 0 payment for order flow. They're running this promotion that you can get up to $7,000 in free stock as long as you deposit $1 on their platform. Right now, there's double chance of getting Apple stock within the next 37 hours right there, so you'd have to act quickly for that one. There's also free level 2 data, and it is a member of FINRA and SIPC, so you know it's a good one. The promotion is absolutely amazing, up to $7,000 in free stock as long as you deposit $1 on their platform, and if you go up to $2,000 in your deposit, you can get 3 additional stocks up to $3,500 each. And again, double chance of getting Apple stock right now currently. That link is the first link in second link in the description down below, second link in the pinned comment section. So check it out if you guys would like. But with that being said, let's get right back into today's video. Also, with that being said, the cost to borrow is at 400%. So if it stays this high at 400%, short sellers will take a 100% loss within about 3.5 months or 1 quarter of trading. So if this merger doesn't go through within about 3.5 months or so, then short sellers take a 100% loss anyways on their short position, which will be absolutely instrumental in getting shorts to close their short positions. Now, Fintel is listing it at a 700% cost to borrow. So short sellers paying this rate will lose their money even faster. So like I said, what we're seeing in RDBX is a race between retail investors that want a short squeeze and obviously market makers and shorts that want the stock price to go down to 50 cents, which is that merger agreement. And I'm going to be honest with you guys, it's really leaning in the favor of retail investors in this case, because well, the merger is going to take a while for it to go through, and that cost to borrow is just simply too high for short sellers to hold out. And you're already seeing them hedge their short positions. On Friday, we saw institutional calls come in for the first time on this stock right here at 10:30 a.m. on 5/20, which was last Friday. It was for 40,000 and 42,000 worth of premium, both on 617 $4 call options. Today, we saw the exact same thing happen. $7 strike price, same expiration date, also around 10:30 a.m., a little bit before there at 10:17, but they're betting $50,000 that this goes above $7 per share by 6/17. So right now we're seeing this at about $6 per share. There is plenty of upside before we get to that $7 mark, and obviously this is an amazing sign. I mean, when we do see institutional flow, this is more important to me than actual flow. So moving into the unusual whales data, it's also very, very bullish. As you guys can see, we've got about 85% bullish premium. Most people are going for June 17th right there and the $4 strike price. There were some put options that just came in right now. I'm not sure if that's going to be like some intraday swing. It's not as significant to me, obviously, because it's not an institutional bet, and obviously there's way more premium coming in on the call options as well. The put options from this morning obviously got absolutely smacked in the throat. I'm sure these are down pretty bad right now, and this is the most amount of options I've also ever seen on RDBX. And as you guys can see, yesterday on Friday and then today, the call option volume has been significantly higher than it was in the past. The max pain, as you guys can see, for 520 was $6 per share, and for 617 it's going to come back down to $4 per share, which does pose some slight downside risk. If more institutions end up loading up on puts or whatnot, that'll bring up the max pain, and then you guys can see gamma exposure. It's all positive right here. So positive gamma exposure, most of these contracts are actually in the money. This could be huge in terms of gamma squeeze, because if this does hold $6 per share up until the next expiration, it'll just put a lot of pressure on market makers to hedge their positions. And then looking at the open interest here for call options, most of the open interest is already in the money for that June expiration. And it looks like it doesn't really have too much open interest outside of this expiration. People are mostly just speculating there on the June expiration, although there is some open interest here in November as well. All in all, Redbox Entertainment, or Rdbx, is an absolute monster setup, and we really haven't seen something set up so nicely since probably SPRT back in, what was it, June now of 2021? Such a long time ago, and Rdbx is also set up very, very nicely. And like I said, it's a race between short sellers and retail investors, and obviously it costs absolutely $0 to just buy and hold the stock. Meanwhile, short sellers are paying up to 400, actually up to 700% in borrow fees. So if this merger does not complete, or if this merger doesn't complete for, let's say, 6 months or so until the second half of 2022, short sellers are gonna be in a very, very bad position. And honestly, this is one of the few situations I'd say where retail investors really have the upper hand. So I do like Rdbx. Pay attention, be mindful to some of those shorter time frames. It's definitely sitting on the overbought side right now. I didn't really do technical analysis on today's video, so make sure you do your own TA. Make sure you're not just chasing this thing and potentially buying in before there is a profit taking situation. But that's all I got. Like the video if you guys enjoyed today. Check out Hootmoney trade alerts if you guys want all the plays. Again, we sniped SPY calls at 380, literally the bottom on Friday. Those are up over 130% already. We also got TRKA. We called out EOSC before that ran 50% in the day. So overall, Hootmoney trade alerts has been absolutely eating. It's that first link in the description or pinned comment section down below. And also you can obviously check out Moomoo, where you can get up to $7,000 in free stock as long as you deposit $1 on their platform. That's all I got, my friends. I'll be seeing you guys next time. Have a wonderful day. Also, I'm live streaming at 2:30 p.m. today. This video should go up before the live stream, so make sure you guys roll over there and check out the live stream as well. But with all that being said, I'll be seeing you guys next time. Have a wonderful day.